Hello, traders. It is 8 a.m. Chicago time on Wednesday, the 13th of May, 2020, episode number 1754. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just an interesting day yesterday. Um, be careful here as Fed's Powell is releasing comments causing a reaction in the markets. The markets have dropped. Um, and we're seeing movement as a result of it. Um, don't have any text feedback yet. I guess he can be viewed live. So just keep an eye on that. Just keep an eye on that going forward here. Um, the market sold off yesterday. The indices sold off yesterday, and we have recovered a little bit. We did finish at lows on what turned out to be a trend down day yesterday. So some of the indices are positive, but I got to tell you, the overall sentiment is still to the is towards safety. We're not far from where we had left off yesterday. Gold leading the pack today at 1724, trading at $1,724, up 1%. The bonds are up. Next, the bonds are up 27 ticks, almost a handle, or 0.5% on bond prices. The Nasdaq's up 34 and a half points, or 0.38%, and so on. So the DAX is off 187 points, or 1.73%. The Euro stocks are off 48 points, or 1.67%. So a mixed bag, but I'm leaning towards safety in terms of risk allocation today, and that's likely to continue. Some interesting features or some interesting structures created by yesterday's auction. We're seeing the follow-on effects um, today in the overnight session. We did drift up from the low of yesterday in the S&Ps, but are giving some of that back a little bit here. The trend overnight has been up. So that's where we stand in terms of economic data. This morning, balanced trade came in for Great Britain was really a lot worse. 1.7 billion draw expected came in as a deficit of 6.7 billion. GDP growth was expected at negative 2%, came in at 1.6% better. Q on Q, negative 2.4, came in at 2%. So all of that, the GDP out of Great Britain was decent. There were a few numbers out of out of the eurozone, and other than that, really not much more. PPI came out this morning. We doubled it on the negative side. Was expected month on month was expected at negative 0.6%. Came in at negative 1.3. Core PPI month on month came in at negative zero point 0.3 versus negative zero point 0.1. So looking ahead, we do have Fed's Powell speaking currently. Just to pay attention to that. At 10:30, we have the EIA crude oil stocks. The consensus is for a surplus of 4.147 million. The prior is plus 4.59. Crude stocks are expected to be at negative 2.2 million barrels. The prior was negative 3.158 million. And then we get ECB's Guindos and ECB's Lane at 11 and 12 o'clock Eastern, and that pretty much wraps it up for today in terms of scheduled action. So that's where we stand. Let's move on to the review segment. Yesterday was clearly off. Given the way the market had positioned itself Monday, and the way it was opening, despite the low being right underneath the prior day's session, we were opening very close to the overnight high, and the primary expectation is we would take out the overnight high for the overnight stat and continue to push to at least 2948. Remarkably, the S&P finished 100 points lower almost than that target. Scenario two was looking for a pop higher and forming an excess high somewhere near 29.48 and falling back into the range, dropping to about 29.18, the 29.18 area. That's right here. That's what was expected yesterday. The market was a lot more aggressive. Here's what we got yesterday. We pushed up. We took out that high, went to 39 and a quarter. So we took out the overnight high, put in what was an open auction. This is a little bit zoomed in, but some pretty decent structure here yesterday. The short kind of made its appearance early, which is kind of unusual. But it made its appearance early. It put in an opening swing, pulled back, and had a very weak retest of the opening swing, and then continued lower, and then pulled back to mid VWAP and the opening swing low for confluence there. Didn't quite get all the way up there. Stopped about 4 ticks short of the mid and the OS low. And then we had this impulse lower, as those of you who've been following for a while, once we get that impulse lower, remember we tested above the prior day's range and rejected value above the prior day's range. And on this weak high at 37, remember I talked about this 37 being a terribly weak high and very, very likely to go. Well, once that was rejected and it came back down and we impulsed down, then we're looking to the short side only. We spent an awful lot of time chopping around in here, kind of testing and retesting the mid. And then finally, after several hours, it gave that up to the short side. The key target test area yesterday was 29.19 right here, this stock zone. Notice that the point of control shifted. Notice that the point of control shifted to the low volume node and to that 29.19, 29.20 area. Point of control yesterday, a lot of the trading occurred at 29.20. And then we had an impulse down. We pulled right back to the IB low before we have our continuation. So there's the impulse, pullback, continuation, consolidation, an attempt to test higher high here, and then that didn't go anywhere. So it rolled over, and once we took over and took out the prior low, the prior session low, things accelerated to the downside. Essentially, one-time framing up has ended, and those who are long are now having to cover. And we very, very quickly dropped into, if you recall, 28.80 was a target from Monday to the downside, pushed right through, pulled back, continue, and then it got to the MC point of control from earlier this month, from last week before it rested up. So this is what we had yesterday. We finished at the low. Which gives us a high probability continuation into the overnight session into Globex, as the auction was interrupted by the pit close. And that's what we see in the overnight session right here. So we open back up right there. We open back up and we immediately go to the sell side. And then we've been kind of tracking in a channel up until these Powell comments. What we end up with in the overnight session is quite a bit of volume. There's a lot of activity, a lot of positioning in the overnight session. In the overnight session of 466,000 contracts, but it's been tracking up and it's been a very, very choppy overnight session, holding above the mid throughout the session on retests on the way up and shifting the point of control to the upper end of the range at 28.67 inside of yesterday's range. It was looking like it was climbing. It was making a very strong effort to climb until these Powell comments, and then we just gave that up. So That's where we stand this morning. An important area to monitor is the beginning of the sell-off right here. This level is 28. Oh, don't know if I can draw this. 28.9875. This area here, I'm going to watch carefully. This is likely to be an important test area on the way back up. We have a low somewhere in the 28.94. So this range right here, as long as it remains open, is likely to tell us that we're looking for the swing down to continue. So that's the overnight session. Again, it's characterized by high volume. We just added a whole lot right there. We just added another 12,000 contracts as I was speaking. We have high volume. We have a very well discovered, well contested profile in the overnight session. We have dropped through the mid here for the first time since the Asian session. We're likely to shift the point of control down into this 50, 54, 55 range right here. We're likely to shift it down, giving us a low volume node to watch. Right here is outlined 65. You see the 65 high, and then the 65.75 retest, giving us this low volume node in the overnight session. So that's an early indication of what the market's intent is. Again, 65.75, 28.65 is an important area to watch on the open. How does it treat it? How does it treat it once we open and go to test in that direction? The delta is negative, and now we're even. We are even with yesterday. We're basically unchanged with yesterday's close, giving us neutral overnight inventory. Okay, so that's how things look. Yesterday's volume was pretty good, 1.42 million. Pretty good volume on the selling. Today, I'm looking to sell any attempt higher, any pop higher, as I expect weakness to continue. Oops. Looks like, again, my monitors are playing games with me here. All right, let's continue with this. This is a CT Bookmap. We're looking at the order flow. This is yesterday. A lot of volume there, the red. This is yesterday. We close. We reopen at 5 p.m. Chicago time. And as I said, it tested down. You can see liquidity coming in after the test. It tested down, and since then, it's been kind of tracking to the buy side. And I got to tell you that this trade overnight is not characterized by anything, any structure, any trading that makes any gives us any clues. We see the liquidity come in. You see that right here, but then you see it stop as the market approaches. Again, liquidity comes in on the offer, and then it stops before the market comes in. Again, right here, right here. It's all just false until this 2870 area where we end up getting tangled 2875. So to me, it looks like the sellers are really, as the market moves up, the sellers are not really committed. They keep expecting higher prices and keep shifting that liquidity higher as the market moves up. So we'll see how that's treated today. We do have some firm liquidity at the low, which happens to be 28.25-ish. Firm liquidity at the low, but other than that, there's not much to talk about here. 28.25 and 28.15 in terms of standing liquidity, and then of course this I believe is liquidity that's likely to trade out. That's at the 28.9875, 2900 zone that I would expect to hold at least for a test. Okay. The delta is negative, is pretty negative since yesterday's session. As a continuation of yesterday's session, this CVD here, this volume delta is it resets at the open. So this is carrying over from the prior session. I don't reset it with the overnight open on purpose. I want to see what the continuation of the session has done. So it hasn't recovered very much, and I expect that yesterday, having been an impulse day down, I expect that yesterday is likely to give us a continuation today. Let's look at what's expected for today. Let me adjust one of my profiles here to incorporate a bigger composite area. Okay, so what's expected for today? Here's the lay of the land. Okay, so we have a low. Oh, let me change the color. We have low, a higher low, and then we break that higher low. So we fail to create a one-time framing up. But since then, some good one-time framing up going on here until yesterday. That one-time framing up is broken, and we've come right back into this balance area. If I throw a composite on these balance days here, we have a composite at 2873.50, a composite point of control 2873.50, which is just under the overnight high. I'm looking at this morning, I'm looking at the 65, then I'm looking at this 73, and then of course the overnight high, and then above there we're looking at the 886. The 2886 is areas that are likely to see a reaction. This morning we're opening at the bottom end of the range. I'm expecting that we are likely to become responsive into this composite point of control. The composite point of control at 73.50. So I'm looking for it to push back in here, consolidate, take out the overnight high, and then sit sideways to rest, or most likely, because this was an impulse down, I'm looking for a continuation. Whether that's today or tomorrow, I don't know, but I'm looking for a continuation and a break of 59 and a quarter. And a lot of this push up is going to likely be driven by the tech sector, the comm services and tech sector, which have had, I think, 6 consecutive up days, and showing a lot more strength than the other sectors. So techs, represented in the NQ, have been really strong, and overall, the expectation though is we're likely to respond, but I'm not expecting that response to last. Now, this is barring any news. News is flowing all the time. I can't speak to that. I don't know what POTUS or any of his staffers are going to say. But if the auction was to run under its own power, this is what I expect. I expect it to respond up, get tangled up at 73.50. That stock zone, push the overnight high, and then maybe push as far as 28.80 up here, and then roll over and potentially take the low out, giving us about 30 points of range. That's scenario one, is a continuation of the impulse. That is the most likely scenario. Secondary is really the opposite. It pushes, takes out the low, rummages around in there. One of the key things to remember yesterday is the market tested up here. It tested the high. It tested this double top high, and it only started selling once that test failed. So, you've heard me talk about this before. Jesse Livermore talks about it in the reminiscences of a stock operator, where a confident long, let's say a confident long, is when you see that the shorts are being absorbed, that any selling is being absorbed, or it's failing to continue on, failing to get continuation on a push down. That's when the longs for an investor or swing trader are more confident. And that may be the scenario here as we push down into 84 or so and an impulse back up, back into the range and start walking towards that overnight high, the 2880, 2888, and potentially the 9875 before it kind of unwinds. That's quite a bit of range from about 44 to about 88, 86. That's quite a bit of range on the buy side given the current conditions, the current range. But that's the secondary scenario, is that it uh, pokes below, and prices where they are now are seen as a bargain, and then we get a responsive spree back into yesterday's thin leg. And I'll show you that leg in the market profile. The market profile is good at showing us this. It's bad at giving us an idea of how much is going on, because it's just looking at time. But you can see that that is a sprint down from that 98.75 area, right? So that's the key reference price here, 98.75. Above 98.75, we're likely to see a squeeze of the shorts back into the 29.23 area, the 29.23 area, which is the MC point of control of this region. Okay, does that make sense? I know I'm covering a lot here, but that's how things are laying out. I'll leave you with that. As always, mind your risk without knowing how much you're willing to pay to find out if the market is in agreement with you, with the four factors that go into the trade: direction, location, the size of your stop, your risk size, and then the size of your exit. These four things are what we're testing every time we put on a trade, and the cost, the toll, the token of doing that test is your stop. That's how you have to look at it. Getting stopped out is simply the cost of discovering if you have those four things right on this coming trade. So without defining those, this is simply a gambling venture for entertainment. It's not really for trading. And in the long run, traders who do the work are likely to take your money. I don't want to see that. I want you to be here for the long run. I want you to turn into a career trader. It's been my entire focus online for the last 10 years. Good luck, and I'll catch you tomorrow morning. Take care.